Hello everyone. Today we'll be briefly explaining what earnings season is and how you can trade it. Now, earnings season is quarterly reports highlight the company's revenues or losses, expenses and overall profitability throughout a given quarter of a year. Earnings season is easily one of the busiest times of the year for those who trade in the markets, as every large publicly traded company will report the results of the last quarter. Earnings season reports are released every January, April, July, and October. You can often see a lot of movement in the shares of companies releasing reports as the market reacts to the new data. It is not unheard of to see shares jump 20% or more, or to see them fall by the same amount. Now, why does this matter? Earnings season can be a time of heightened volatility and trading volume in the markets as investors react to the onslaught of news and new information about companies. Much of this reaction centers on the difference between what companies were expected to report and what they actually reported. Consensus estimates are important during the reporting season. These estimates often form the basis by which investors will value a stock. They become the baseline expectations of the market. So basically, what the expectation is, usually is what the current value of it is to the market. When actual reported results differ greatly from consensus, the price of the company's share will greatly be affected in the short term. How to trade an earnings report. Check an earnings calendar to see upcoming releases. You can usually go to NASDAQ. Check EPS or estimated earnings per share forecast and compare that with the previous quarter's EPS result. Check if the result will be released pre-market or after-market. Usually tech companies release after-market closing. If pre-market, then wait for the result to be released and open a trade after based on the result. If they beat expectations, usually the stock should be going high. If aftermarket, then you can either trade based on sentiment or trade the correction. So if a company is expected to have a positive announcement aftermarket, during that trading day, it's fair to say that the stock will be gaining due to a positive sentiment. Now these are some examples. JP Morgan on Friday reported third quarter earnings that crushed expectations. The firm reported earnings per share of $1.58 against analyst expectations of $1.39, so it was a positive result. Those who traded an hourly call option on the value of JP Morgan stock at the time would have been successful. Netflix added about 3.2 million subscribers internationally in the third quarter, higher than the 2.01 million average analysts estimate, sending share price soaring 20% on Monday's late trade. Bank of America, Wells Fargo, JP Morgan Chase, and Citigroup have also already reported third quarter earnings, each one beating expectations. Now this is about trading tech companies on sentiment. Here we have articles that came out before these announcements were made. You can see here the expectation of Yahoo was negative, as you can see on the sources provided here, if you want to look more into it. eBay's price was hyped, meaning they expected a higher than forecasted result. According to an analyst, for example, from UBS, Eric Sheridan, and also an analyst, Daniel Kunos, they raised both their target from 33 to 38 and from 34 to 36. So they both expected a very positive result. So these trades below are an example of a sentimental trade. As you can see, eBay was expected positive, a sentimental trade was placed for high. Yahoo was expected negative, sentimental trade was placed for low. Netflix, again, they released on the 17th of October after market. What drove Netflix was their subscriptions. So when you're trading and you're looking into a stock, you have to look at what's important. For example, Netflix, the most important thing for them was not revenue, but the subscriptions. Now, as soon as the stock became available, there was a trade open for based on a positive sentiment, and the last expiry of the day was selected. On the 18th of October, after the positive result came out, the stock went up by 20%, as you saw before. Now, big bank earnings. Now, historically speaking, big banks usually cut their estimates prior to the earnings season report. If you go back to the second quarter of the year and the first quarter of the year, quick Google search, you can see that they were expected to have, most of them, the big banks, negative announcements. Now we can see here JP Morgan, earnings expected to decline in a low rate environment. Citigroup cuts Fortinet's target to $31 on negative third quarter pre-announcement. So these articles came out before the announcement was made. Now this is what usually happens. Why the banks usually lower their estimates prior to the announcement is so that they can come out with a result that beats expectations. As you can see, these articles both here, the headlines are from after the announcement have come out. They have both beat expectations. And if you can see here, 14th of October, when they came out, the stock spiked. So a way to trade this would be, if you're trading big banks, like JP Morgan, Citigroup, Goldman Sachs, Wells Fargo, etc., you can open a trade prior to the announcement coming out to go high. This is using historic patterns and the habit that they have of lowering their expectations prior just so they can beat expectations. You can read all the sources below for more information. Now this is Goldman Sachs example. They released on the 18th of October. You can see here again, another spike in a major big bank. Now this is overall earnings season long-term trends. Now, according to this source over here, the S&P dropped their estimates by 2.9% for the third quarter. So this is a long-term sentimental trade. During the third quarter, analysts lowered earnings estimates for companies in the S&P 500 for the quarter. This article came out on the 30th of September. If you want to visit that page to see, that's why this trade here was placed as a sentimental trade long term. By the time earnings season finishes, this result, if successful, is because of the sentimental trade. These are a few upcoming earnings report releases. Today we have Microsoft. They're expected to release a positive result. They will release aftermarket. So how you were to trade this, if you will trade on a sentiment, is when the US market opens, you could trade the latest expiry of the day high. Now once the result comes out, will be aftermarket. You can maybe follow up the trade tomorrow depending on the results and what news has come out. Now the way that you compare whether it's going to be positive or negative, you can visit the NASDAQ calendar, which you can search, or you can take the link from below, and we can see here, where is Microsoft? Microsoft Corporation. If it has this logo next to it, it means the announcement is coming after market closes. If it has this logo next to it, it means the announcement is pre-market. So last year at the same quarter, it was 0.67 cents. Now they're estimating 0.68, so it's not a big difference. So what we can be looking at is what would be driving Microsoft's stocks. Now, what we can do is do a quick search. Microsoft earnings. This is the best way to do your own research. Go to news, search tools within 24 hours. Now, what you could do is you could open a few articles, see how many are for positive, see how many are for negative, to make your own conclusion as well of what would be a positive outcome. Now back to Netflix. When you have such a big movement after market of 20%, usually you'll see the stock drop within the next day or the next few days after such a gain. The reason being is, for example, this was a nearly 20% rise. So if you owned $100,000 worth of stocks in Netflix, you would then be the owner of $120,000 worth of stocks. However, in order to liquidate that, you would need to sell your stocks to collect that profit. So that would bring the price down once people start selling for profit taking. Now we can go the 24th of October. Let's have a look at Alibaba. So as you can see, one of the first headlines here, just from the headline, you can tell people are bullish on Alibaba. So this article came out yesterday. Again, you can make a sentimental trade on Alibaba to gain. This should be expiring prior to the announcement, just in case the announcement is not positive. Now, the best way in order to see which stocks you can trade is you can go to our platform, go to Education and Tools, Asset Index, Stocks, and then you know which companies are listed on our platform, and you know what to look for on the NASDAQ calendar. Again, today the market will be opening within the next approximately 7 minutes. So our trade of the day would be Microsoft if you're going to take one on a sentimental trade. And according to sources, they're expecting a positive announcement. So you would go to trade, binary, and stocks. That will give you the expiry for the latest one of the day. If you're doing anything longer than that, you go to long term and then you choose the asset that you want to do. Okay, so now within the next 10 minutes, we'll be opening up when the US market opens. And as of today, the first 20 people that would make an investment today can get a 50% discount on one of our VIP accounts, or receive 100% bonus on any deposit above 500. If anyone is interested in this offer, just please send an email to support, and someone will get back to you. Okay, now these are just some of the sources that you saw in our presentation. So you can see we're always using reliable sources and never making our own judgment without looking at experts' opinions. So this article was written by analyst Eric Sheridan from UBS. Now we're trading according to what analysts are doing. Now follow analysts' opinions and apply the correct results. We should have a high enough success rate to make a profit.